Last week featured mixed macro movements for Bitcoin, BTC, gold, XAUUSD, and Euro USD, driven by US-Iran ceasefire hopes, oil fluctuations, and anticipation for the upcoming Federal Reserve meeting. Last week market recap: July 20 to 26, 2026. Bitcoin BTC traded defensively, pulling back below $65,000 midweek from a 1-month high after surging oil prices reignited inflation fears, before stabilizing near $64,500 to $65,000 as US-Iran strikes paused. Gold XAUUSD. It struggled to maintain momentum above $4,100, testing major support near $4,000 due to a firmer US dollar and a pullback in crude prices following diplomatic de-escalation hopes. Euro USD. It faded its push past 1.1400, drifting lower toward the 1.1370 support zone as persistent US yield pressures and energy headwinds weighed on the signal currency. This week outlook: July 27 to 31, 2026. And these are key risk events. The scheduled FOMC interest rate decision on July 29, followed by US Q2 advanced GDP growth estimates and June PCE inflation data on July 30. Bitcoin outlook: Bitcoin is expected to remain range-bound near $65,000, heavily reactive to macro data prints and broader stock market sentiment. Gold outlook: key focus remains on the $4,000 psychological pivots. A decisive break depends on whether the Fed signals a hawkish or soft stance regarding September rate paths. Now, Euro USD outlook. Euro USD is vulnerable to break down below the 1.1370 to 1.1400 support area if the Fed maintains a firm tone, keeping the pair capped under 1.1480. Gold first. And gold has been consistently grinding lower for months. Gold has been in a month lows. You could see gold has been lower highs. So gold has been consistently making series of lower highs into a strong demand zone. We have seen this zone tested multiple times, but this zone is not yet broken. So, key risk event for this week: FOMC July 29 Fed decision interest rate is one of the key events that might, if the Fed is hawkish, we can see that the break of this supports, because if a hawkish Fed is equal to a stronger US dollar and a dovish Fed is equal to a weak US dollar. So traders are waiting for the FOMC interest rate decision on July 29 for gold. Now we will see that at the Monday open, gold gapped up, but that gap has been closed very fast. Yeah. Gold opened with a gap on Monday, but we could see that the gap has been closed. You see this gap, and then started seeing selling interest and started standing lower. So now bears has to be very careful. They have to be very careful so that they don't get trapped. So they are not playing a bear trap game. that the smart money are playing. So we have to be very, very careful, because gold has been making series of lower highs. That doesn't mean you just sell randomly or just enter into the market randomly and started selling. So wait for price to come to your zone, to your setup. Now, if this breakdown help you, drop a like to this video, as it helps more viewers to see this content, to find this content, and it also encourages me to do more content on weekly analysis about this on the overall market weekly analysis. So follow me as I break them down.